Welcome to Shareholder Primacy from Free Float Media, a podcast about activist investing, securities law, and all the ways the financial and legal worlds intersect and collide in real life. I'm usually here with Ann Lipton, law professor at Tulane in New Orleans, who teaches and researches securities business law. Ann is away once again this week, working on some other stuff. Instead, we invited Andrew Droste of Columbia Threadneedle to join us to talk about corporate governance, ESG investing, activist investing, and all sorts of other interesting and fun subjects. Hey, Andrew, how's it going?
Mike, doing well.
Ann and I asked Andrew to talk about what it's like these days to oversee stewardship at like a big investment fund, at a big investment company, including like what he's seen in corporate governance and activism these days. He happens to have a very fun Substack newsletter on corporate governance, which I want to talk about. And we'll get some of his views on like current issues and subjects in ESG, corporate governance, activism, and so forth. Let me pause and tell everybody that we have our new email address, shareholderprimacy, one word, at freefloat.llc. Ann reminded me to promote that, to tell us their questions, complain about what we're doing. We really want to get a whole group of questions together and we'll do a show. So please let us know what you're thinking. All right, let's get back to Andrew. Let's start by looking at kind of stewardship today. There's a lot of folks I know, activists I talk to, others and so forth, that want to understand better kind of how stewardship, ESG investing, whatnot, kind of works at a big fund. And you're kind of in the middle of it, kind of near the top. So we wanted to try to I wanted to discuss that for a while. First, let's get the basics out of the way about what Columbia Threadneedle kind of is. Is there like a basic pitch you sort of can say about Columbia Threadneedle?
Yeah, sure. So we are roughly 600 to 700 billion assets under management. Columbia Threadneedle is the subsidiary or the global asset manager for Ameriprise, which is
sure, Ameriprise Financial.
Yep,
I see them all over the place. You got financial advisors everywhere.
Exactly right, exactly right. And that's somewhat little known, I feel like, in the community. But in any event, we're a bottom-up shop. Governance is under the umbrella of the Sustainable Research team, which is under fundamental research, and kind of we pride ourselves on the rigorous research that we put into the process.
So your direct leadership are what I would call kind of equity analysts, sell side analysts, kind of, or buy side analysts.
Yeah, and so we work hand in glove with those fundamental analysts, and then of course we are then kind of the experts when it comes to, at least on my side, the governance side, stewardship side. So I'm global head of corporate governance here at Columbia Threadneedle, and I sit in the fundamental research department. So we're doing a few things, right? So the pillars that I like to point to are proxy voting, of course. So the governance team, we're focused on the quote unquote priority companies, right? I think every shop has some form of it, whether it's tier one or manual votes, however they kind of describe it. We describe it as priority companies, and those are typically companies where we have either a massive ownership in, or the threshold that we have, it meets that threshold of ownership, and that's across not just our internal funds, but also the Rio clients as well, if we're voting on their behalf. But then also, it's any sort of case by case or refer situations where our policy, is silent on it, right? Or maybe it's a fact pattern that we want to look at case by case. And so suffice it to say that those then end up as a priority company as well, and those are the meetings that the governance team will cover.
All right, so you're out there talking to the companies, or along with, it sounds like, having these, what I would call, everyone refers to as stewardship meetings. We're going to go talk to our companies and the occasional activist, when that happens. But that's sounds like it's fairly well coordinated, like with the research, with the PMs, with the analysts.
Absolutely. I mean, every single engagement that we have is on a shared calendar, and if a portfolio manager owns that company, they join us. Same with the fundamental analysts. If they cover that company, they're they're in on that engagement as well. But on the governance side, it's the proxy voting as the first pillar. It's the engagement with companies, obviously, as the second, and then the third I like to think of as thought leadership. And really, it's that fundamental research that we're including regionally and across all portfolios.
All right. So how's everybody doing this year? What's this year? I mean, I've heard said this others before. Somehow I don't like the phrase proxy season.
Yeah.
I've never loved it, but we'll call it that right now. How's proxy season going for everybody?
No.
Everybody kind of keeping their head straight?
It's excellent. Yeah, as always. No, it's so far so good. We're really right at the tail end of it. For me, actually, my
so most of the research that you're expecting to do is kind of completed
at this point. Yeah.
On individual situations.
At this point, and it really is regional, right? Because we've got Japanese proxy season popping up here at the end of June. Right, and so it's
invest in Japan. I didn't know that's when it happens.
Exactly. So it's like that globally, right? Where proxy season for the U.S., where 60-70% plus of the AGMs are held during that 3-month time period in the spring. You go to other places and that's just not the case, right? And so again, Japanese proxy season is late June, and then we've got a couple of other proxy seasons kind of in the interim before
different
the 20s. Exactly. And so this is why I'm very happy that on our team we have that kind of regional approach to governance and engagement. Suffice to say, just getting back to kind of the question, I actually think that this year has been excellent relative to kind of other years, and that's not to say that they were
Everybody's
bad.
getting along pretty much.
Yeah, exactly.
There's somewhat fewer precatory proposals, so you've been able to focus more on
governance
on some of the important ones. Right.
Yeah, and I think governance shareholder proposals, I'm sure we'll get into it, but governance shareholder proposals have done fairly well the last few years, and you just see the precipitous drop of kind of the environmental and social.
Columbia doesn't submit proposals, I don't think.
No.
Part of your DNA.
We don't. No, that's not part of the DNA per se, but it's always something. I think when the shops that do it, as you know, here in the U.S. are kind of pension funds and those kind of willing to.
There's right.
Yeah, exactly. And so we of course are engaging both proponents of whether it's a shareholder proposal or a no vote campaign, proxy contest. Exactly. We like to, of course, include the full body of evidence in our analysis, and then from there make the right decision on behalf of clients. But no, we don't submit shareholder proposals on our own. No.
So conceivably, some portfolio manager out there may get so irate at some underperforming company, they may decide, okay, this is the year. That'll be the first, and you'll have something to say to them.
Well, it's funny, not to name companies or anything like that, but I have portfolio managers that will reach out directly and say, like, listen, I am so sick and tired of either the management team or the board not doing anything about the management team, right? And I want to deep six all of these directors this year.
These guys have got to go.
These guys have got to go. And I think that there's this realization, like, oh, okay, the proxy voting process or procedure can actually be some leverage in that type of relationship, right? Because I think fundamentally, every time that we are engaging with a company, what we underscore is that this is a collaborative approach, right? Your success is our success. Right. And so what we like to do is take the approach of doing the benchmarking and analysis prior to an engagement and coming up with a list of questions that help them think through whether it's governance issues, stewardship generally, or environmental, social, whatever it may be, strategy, helping them think a bit differently, and then also offering some of that benchmarking data for them to say, hey, by the way, this strategic peer does this. What are your thoughts on this? What's the direction of travel for you all? And so we'd like to take that collaborative approach, but I do think that in those instances where you have a recalcitrant management team or board, or maybe they just seem a bit sleepy, and the portfolio manager is sick and tired of it, they'll reach out proactively, and then they realize, holy cow, we have this leverage of being able to vote against.
So they, Andrew, do you know any activists that are interested in this company?
Yeah, right.
Anybody we can
Well,
call?
it's the relationship that we have with companies. Again, having been at other
I know
shops.
you don't do that lightly.
Well,
Of course not.
exactly. So it's pretty extraordinary. Again, having been at a couple of other large shops, uh, the relationships that I see across the board, not just on the fundamental research side, but also on the portfolio manager side, are again extraordinary. These are
Yeah,
personal relationships, and they're honest relationships where, if the management team or the board is not doing well, we'll hop on an engagement and let them know, right? And so there's that
sure.
candor there that I think is really helpful to the overall process, and thus we don't always have to be binary in the form of a vote, right? We don't absolutely have to say, okay, we have to support this shareholder proposal in order to send a message. No, actually, maybe an engagement suffices to say, like, listen, this is important to us. We want to ensure that the direction of travel is including this in whether it's your opportunity analysis or whether it's your risk
Right.
mitigation analysis. But we understand that in the interim, a binary vote for or against this proposal doesn't necessarily, dictate exactly how we think on the issue, right? I mean that's kind
Right.
of the nuance that maybe over the last 3, 4, 5 years was somewhat lost. It was almost like, hey, however you voted, that's the litmus test. That is the
Right. That's it's like precedent in like court. It's not that doesn't have to be that way.
Well, exactly. And if you have a good enough relationship with that company to call them up and say, "Hey, we want to talk to the chair of the board and we want to just discuss kind of this particular issue. We do think that it's material, but we don't necessarily agree with the full supporting statement of the proponent shareholder
I'm the
proposal."
proponent, right? Yeah.
It's a conversation, right? And I think that management teams over the last few years have genuinely done a very good job at reaching out in the interim prior to the AGM. But after, of course, let's say ISS and Glass Lewis come out with the recommendations, or maybe it's just after they
Yeah.
drop the Def 14A proxy statement, right? And they've done a really good job at kind of pressing the flesh during that time period to say, like, listen, we understand this is the particular issue. Here's why we think you should be, voting against this particular proposal
Or
or
this way.
supporting,
Yeah.
let's say on pay. And I think that over the last few years is why you see more and more management recommendations being followed. Which is why, again, you see that precipitous drop in, let's say, ENS related shareholder proposals or just generally shareholder proposals across the board. But again, that's multifactored, right? We're talking also about
Oh, and
kind of
there's a lot. Yeah, there's a lot of stuff going.
exactly.
And I want to ask you about that
Yeah,
in a
yeah,
little
no
while.
doubt, no
So,
doubt. But anyway, it's good to have a good relationship with our portfolio companies. And for the most part, yes, when a portfolio manager is upset with the company and they realize that, hey, we have the power of the proxy vote in which to affect change in some way, shape, or form, or at least to send a signal or a
right.
message, we'll do that, right? And I think that those
Yeah,
are the
you're going to start using voting first rather than, and maybe a
that's right.
meeting rather than
Yeah, and
agitating for
both really,
some
right? I
other.
mean, I think that being able to engage off the back of an adverse vote is really powerful too.
Oh, that's actually a
Yeah,
good point.
and so
Yes,
in any
exactly.
event, yeah, that
Sorry,
that's how we approach things. And again, it's first and foremost collaborative with the portfolio company, but in those unique
right.
circumstances where a message needs to be
You're,
sent,
you're willing to
yeah,
like you're willing to raise your
yeah,
hand. Well, right. Let's. I have one other question along
yeah,
this
yeah.
line concerning proxy contests I want to get to. And then there's all sorts of other fun stuff to talk about, but I think we need to give everyone a quick break.
No
So
doubt.
we're going to do that right now. And then return in a minute to talk to Andrew about corporate governance and activist investing and so forth here at Shareholder Primacy.
Shareholder Primacy is brought to you by FreeFlowAnalytics.com, the only free database of corporate directors, their influence, and their performance. If you own a stock or retirement plan, go to FreeFlowAnalytics.com and look up which of your elected directors are performing well and which aren't. Use your vote in the alternative democracy and get your data at FreeFlowAnalytics.com. Now, back to the show.
Welcome back to Shareholder Primacy. I'm Mike Levin, talking with Andrew Droste of Columbia Threadneedle about all things corporate governance and ESG and activist investing. We were just talking about the approach to activism, corporate governance, voting, and so forth that kind of works at Columbia Threadneedle and in stewardship. And one other thing I wanted to ask about had to do with like proxy contests. And I suppose maybe there's a little bit of a personal interest here because I don't do shareholder proposals very much.
Yeah.
But I work on my share of board stuff and putting pressure on underperforming companies, just like some of your portfolio managers want you to do. And there's probably not much in the way of like fixed policy for how to vote or how to think about proxy contests. Is that kind of right? I haven't seen much in the way at any of the big investment shops on policy for proxy in the way there's policies for ESG proposals.
Yeah, it's a good question. There's a system, there's a procedure, right? I think there's a framework.
That's what I want to hear about.
Yeah, exactly. So a policy of, let's say, for management, right? Or for proponent or dissident, right? There's nothing like that. It is really, truly, first and foremost, a system or a procedure where, especially with UPC, the Universal Proxy Card rule,
sure,
in recent years, I think has allowed us to develop a more systematized approach. With the reason being that we're able to kind of pick and choose, right? Where it's kind of like a buffet at this point, and it's an opportunity, a unique opportunity, to just really delve into and evaluate each and every single director, right? Rather than as a whole.
Interesting. Okay, so this is it's a chance to really dig into your board representatives.
Exactly. Right. And so it allows us to say, okay, if a dissident campaign rolls around and we've got 4 additional individuals that are looking to sit on this board, are any of them marginally or slightly or largely better than an individual that's, let's say, the weakest link on the board? And the weakest link definition is where a lot of the analysis goes into, right? We're trying to determine whether or not directionally or strategically the board as composed today is the board for tomorrow, right? And so we're looking at not just short-term strategy, we're looking at medium and long-term and how that fits into succession planning. And in addition to that, we're looking for independence too. We're looking at factors related to
and not just SEC defined independence. You probably take, I hope you take a deeper look at independence. Absolutely. And really kind of figure out how people are connected.
Hugely, yes. Yeah, and obviously Matt. With free float, that type of data, I've seen it.
He has a whole business dedicated to that proposition.
That's my
plug
small
that
plug.
Too, or he plugged it for us at the break. So.
No, so I think that just speaking to connections and kind of the web of relationships that are had, and so that's important, but also of course kind of the fundamental factoids of tenure on the board, thus
sure.
like how cozy they are, for instance, with the management team, whether or not they're willing to be the contrarian, right, and actually hold management to account, because that's what you want. Yeah. So these are unique opportunities for us to really delve into each and every single director's expertise, background, relevance, kind of how long they've been out of the game, quote unquote, right, to look at their operational expertise. It really, and then again, to kind of fit that into the broader picture, the full composition of the board, and again, aligning that with the short, medium, and long-term strategy, right? I think doing a gap analysis on that front is always what we attempt to do in order to ensure that we're making the right call.
And this is in the context of like a proxy contest where an activist or dissident or whatever has started. So when that's put in front, unfortunately, there's not that many in a year that you have to do. Though globally, there's probably your share. And again, you're not invested in everyone. So, I think, I track these things. So there's, call it 20 or 25 maybe in the U.S. Yeah. And again, Columbia's not going to have a position in all of them, or maybe some of them. But to what extent then, and I think I'm asking a really hard question, if there's not a contested election and you're starting to look at directors, if it's just a regular meeting, How do you think about director elections then, or re-electing not incumbents that aren't being challenged? What's the mindset there?
Yeah, a big part of it is somewhat backward looking, right? We're looking to see whether or
Sure.
not in the last year has something occurred that is a risk for us, right? Is this something where potentially something has come out about the company from the management side that, let's say,
Oh,
the
sure.
board didn't hold them accountable for XYZ reasoning,
Right.
or they were unresponsive to, let's say, a poor director election from the prior year, or poor say on pay.
Or some sort of bad vote, or
Yeah,
just there was some sort of screw up.
exactly. So there's that
Yeah.
backward-looking process of it, which again, is, I'm underscoring accountability in that analysis. Okay, like did they, can we trust them to hold management accountable, or can we trust them to ensure that this pay package is adequately tied to performance, et cetera, et cetera. So
So it's a matter of trust and accountability, whether you can reflect that from what you've seen in the past going forward.
absolutely, that's fundamental. Is that trust between the portfolio company and the investor. But
And your PMs.
yeah, and the
your
exactly.
analysts,
And
yeah.
so in addition to that, though, I mean, proactively, I think that what we're trying to do is also align governance mechanisms with the board as well. And so if for instance, it's a dual class company, right? And they haven't
Oh, sure.
set forth a sunset provision or codified it in any way, shape, or form. We're going to take a hard look at the
Oh,
chairs.
and in the director vote,
In the
that'll
director
affect
vote
your
for
that'll
this.
affect your director vote.
Yeah,
Oh, wow.
and it can, because what we're trying to do is, again, from an accountability perspective, determine whether or not they are holding management accountable on that front, right? Typically, when we're looking at a dual class company, we're looking at founder led in a lot of cases. That's not always
Many
the case,
times, yes.
right? But
In certain
cases.
industries, it's more prevalent. Media, it's a
Exactly.
big deal.
And
So yeah.
and you kind of want to take the approach too, where why hold Nom and Gov committee chair responsible for that when you can hold the only individual that can affect change on this
Right.
front by, let's say, selling their Class B shares for Class A shares to make it just
Right,
commons,
of
right?
course.
So let's vote against that person, right? And
Right.
in most cases, it's unfortunate because even when you do, they own the vast majority of the vote, and so it's not going to affect that change anyway. But yeah, I think those are those votes that are signals, right? Those are nudges to say,
Sure.
like, listen,
those
we
are
want to.
those are representative of kind of broader trends, which
Absolutely.
I want to talk about in a minute. So
Yeah. So I mean, I think this is a long way of saying that we're looking backwards to determine, in the last year, if there've been hiccups, and we're looking forward to determine, okay, is this the right individual to be pushing back on management accordingly, and if not,
Right.
we're taking that second and
You're
third
going to
look.
make a statement
Exactly.
and say,
And we typically, as a shop, like to look at leadership, right? We don't like to necessarily call out an individual director based on X reason unless there's a very, very strong case for that. Otherwise, what we're doing is looking at structure. We're looking at systems of governance, and where the individual is a chair of Nom and Gov or compensation, remuneration, or audit, we'll then be targeting that individual because, of course, that's where the buck stops.
of course. All right. Let's extend on this because there's something else I wanted to ask you about related to your hobby, which kind of seems to be the expression of a lot of stuff we've been talking about, which is your Substack newsletter, Mr. Corp Gov, right?
Alter
And you've been
ego.
doing that for a couple of years now, haven't you? I think.
Yeah. Yeah. It's probably been about 2 years. I think
And
I started.
I want to know kind of what's the animating idea? Are you just trying to like put out there stuff that you're seeing in your day-to-day work that kind of catches your eye? Is there what are you trying to accomplish with this?
Yeah, and I'm a sick individual because I,
We all are.
I find, yeah, like the intellectual curiosity that I have toward governance issues, and just how it intersects with the environmental and the social. I mean, I think that's really fascinating to me, and I think that, whether it's shareholder proposals or AGM votes, I think that the ultimate votes that we see during proxy season or just after an AGM, let's say if it's an AGM in the off season, these are like, these are, like I said, having your finger on the pulse of very relevant contemporary issues that not just that company is dealing with, but also society more broadly, right? And I think that I've always followed policy and politics and things of that sort, right? I think I find that fascinating as well. And I think that it's a unique window looking at these results into kind of what shareholders are thinking in a capitalistic society. And I think to me that matters. It matters whether or not a shareholder proposal passes at a particular company, right? I think it does show in most cases that there is financial materiality there. Otherwise, a broad swath of investors wouldn't have supported it. And for me, that's kind of a tastemaker then to what we see in politics and what we see being discussed at kind of a broader regulatory level. And so these are really fascinating topics to me. And I think that you get also your fair share of just drama, right?
So it's kind of like you see stuff every day in your stewardship role, and then you sort of say, wow, there's implications. There's a lot of people that should know about this.
Yeah.
And some people may already know about it, but I want to, and here's, there's something going on at Tesla, which of course is our favorite company to talk about.
Yeah.
Or something at some other whatever. And so that's the source material for Mr. CorpGov.
Yeah, and it's all, so you'll see it in my disclaimer, don't worry. But not only is it not, representative of either of my employers, being the U.S. Army or Columbia Threadneedle. But what I also say in there is that I stick strictly to public information, the facts, right? I try not to.
Oh, yeah, right. You're not going to take some sort of result from a stewardship meeting and say, I'm going to go put this on the Substack.
That's right. Exactly. So, there's no MNPI in there whatsoever, of course.
Right.
But also, I try not to necessarily insert my opinion either. I have opinions, but I try to just strictly stick to the facts. In most cases.
Here's an interesting development that people should know about, and I'm going to put it out here on this Substack, which has now a decent readership.
Yes. I'm very lucky to have people that think that it's somewhat relevant to what they do too. And so I don't know. Listen, it's good for me too. I think that from my professional.
Oh, it keeps you sharp.
Definitely. Again, this idea of kind of keeping your finger on the pulse, very important in our industry because things change and move so quickly. I mean, look at, again, shareholder support of particular issues. So.
Your finger's been on the pulse for a while though, because I was intrigued to learn that you're a lawyer. I mean, or you went to law school.
I went to I'm a degenerate lawyer. Don't practice, and
you never even thought about going to
no
practicing law, right?
That's what was so beautiful about Northeastern. So Northeastern Law.
That was your law school.
Yeah.
Okay,
so they have a co-op program, and I still work very closely actually with this program that I'm about to mention. But JD Advantage, right? So they have a program called the JD Advantage program. I work directly with someone at the school. I've helped bring the co-op program, to a couple of different employers in my time. And I went to law school thinking, I don't know if I want to practice ever. But I do know that I want to be, to something I referenced before, I want to be in something that's really interesting, that's of consequence. That deals with policy, and so throughout a couple of my co-ops in law school, I was at the state level working.
One of those was the connection to corporate governance, I think, wasn't it? Wasn't that the CII one?
Absolutely. So yeah, I was at Council of Institutional Investors, briefly working under Jeff Mahoney. Their
This is during law school.
Yeah, this is during law school, and so
most other law students are getting like internships like at big firms so they can make a pile of money.
Right. That's right.
And
Well,
your internship was at this small advocacy group in Washington,
right.
D.C. in this very obscure corner of the law.
That's right. No, exactly. And I saw it as an opportunity to not only, move to DC for a little bit, which I was really interested in doing post law school, but also kind of working in a field I had absolutely no background in whatsoever. I mean, my undergrad degree is, in government political science, something to that effect,
right.
And then the law degree, there's really no kind of specification on, this is what I focus on.
And so you ended up just not going to a law firm and just kind of going into various public interest roles and so forth, and then into the investment world.
Yeah. So the funny story is that while I was at CII, it was during the spring conference of 2015, and I met Bess Joffe, and Bess Joffe is currently, I think, at MFS, but met her when we were lobbying on Capitol Hill for shareholder rights, for enhancing shareholder rights. And
this is 10 years ago.
This is 10 years ago. We're on the bus, I think going to Capitol Hill from CII, and she was discussing kind of how she couldn't find certain talent at the analyst level for her team at TIAA CREF at the time. And I inserted myself and said, "Hey, I'm graduating law school."
You raised your hand. You said, "Oh, I could do this."
Yeah, and so by the way,
she said, "Aren't you a law student?"
Well,
you said, "Never mind."
The beauty is that she's a lawyer as well, right? So she's a lawyer by training. I can't remember for the life of me whether or not she's practiced, but in any event, she's a lawyer. So we kicked it off, and within a month, I was down in New York City,
working at TIAA CREF. I mean,
CREF.
one of the premier corporate governance.
They're excellent.
Stewardship shops for decades now.
Yeah. So at TIAA CREF, the CEO at the time was Roger Ferguson, and just one of the most brilliant, kind people that I ever met. And the fact that I even got to meet him at a place like TIAA CREF was indicative of kind of the culture.
As a junior level corporate governance.
Yeah,
analyst.
So he was omnipresent. He was there all the time at any of the events, and so really got to know him as well as, of course, Bess, and we had an excellent team there. But when you get to know TIAA's history and at how it came about for teachers, is just they were in the responsible investment game very early on. So the board committee that I reported into, along with my team. Again, at a very early age, had a responsible investment bent to it, and that had been created in the 90s, and so they were the first pensioner to come out and divest from South Africa during apartheid.
Oh, yeah, they were, weren't they?
Yeah, during the campaign for seat belts. I think it was at Nader.
Sure, they off Nader.
I mean, they were supporting.
So they've been in front of a lot of this stuff. We haven't heard about them a whole lot in very recent years.
Yeah, well,
but so that was probably an unbelievable place to start.
It was. So I cut my teeth there, and was engaging with not only directors but CEOs, CFOs. At the ripe old age of 25, 26, whatever I was, and just feeling completely out of my depth. And I think that was such a great experience to then kind of move on to the other places that then I would go to. It was really just unbelievable preparation. It was an amazing experience. But that's how, from CII to TIAA CREF, which then became Nuveen, of course, to then BNY Mellon very briefly, and then to Russell Reynolds Associates.
I was going to ask you about that. That's not an investment fund. That's a headhunting firm.
That's right. But they have a portion of their offerings as kind of consulting, right? And so I was on the board and CEO advisory partnership team, BCAP short. And I worked with some really brilliant people.
And this is like board advisory.
That's right. That's right. So we were doing a lot of board effectiveness work. The actual content or the remit was to conduct board evaluations. And so these board evaluations, for me, just opened up my eyes to a completely different part.
To like how boards really kind of think and work sort of from the inside.
Being able to delve into board books for the first time, right? And seeing it from the other side of the table has now really influenced kind of how I approach my engagements with companies too. It's a very comprehensive kind of background over the last 7 to 10 years.
So that really, the Russell Reynolds really prepared you to go back to the investment side and look at boards critically.
Exactly.
Because you could sort of see how really effective ones kind of work and how deficient ones kind of don't work.
With that, I mean, beyond a doubt, right? And to focus not just on kind of the mechanisms of governance, but also focus on, let's say, behaviors in the boardroom, right? Or what they're doing for offsites in order to kind of create a better culture, a more open culture, a more contrarian culture, so that, you get the best result out of your board. You see these studies every year, right? Whether it's PwC or E&Y, that, pretty much every single board out there believes that there's at least one person that should drop off
that
their
needs
board.
To go.
And that, from seeing it, behind the scenes, it's absolutely true, right? And a lot of this is behavioral, that the individual either just isn't contributing, or perhaps the weakest link just doesn't have that recent operational expertise that you'd like to help out the
There's a
CEO.
reason why they're weak.
That's right. And so we would conduct these interviews, we called them, right, individually with the directors, and it allowed us to almost play chair, right, to hold up the mirror and do process consulting, so that at the end of it we could produce recommendations that would make them more effective, or that would perhaps suggest that someone transition off the board and open an opportunity through the succession planning process.
Little board refreshment.
Yeah, exactly. And so that was really fascinating. Of course, went through these board books and determined, okay, this could be a consent agenda item versus this is something that really is baked into strategy or risk, and you need to be discussing it. So that was a fascinating opportunity for me, and I'll always love Russell Reynolds for sure.
But nonetheless, you return to investments and return to stewardship, and so here we are.
Well, in a very brief very brief opportunity also, where I went to Carbon Tracker Initiative, which is a think tank.
Oh, sure, right. More in the research on the sustainability.
That's right. And then got poached to come over here to Columbia Threadneedle, and have been here since. And like I said, all of those experiences collectively together influences kind of how I look at policy, how I look at engagement with companies, more collaborative than adversarial, and it does. It definitely influences the way in which I deal with companies.
Cool. Well, hey, we've kind of plumbed very thoroughly some really interesting issues here about how stewardship kind of works at a big shop, kind of how you got there. Don't forget Mr. Corp Gov, everybody. But I think what we're gonna have to wrap up.
No doubt.
So we've taken plenty of time. Andrew, it's been wonderful talking to you about all this stuff and the corporate governance, activism, the current environment. I need to remind everybody to please send us your questions and comments and concerns at shareholder primacy, one word, at freefloat.llc. And thanks again, Andrew, for joining us.
Absolutely.
We're going to have to talk again kind of soon.
Yeah, everybody check out the Substack that is Mike's as well, because I think that the move over to Substack is
I'm starting to move everything to Substack.
No, I love it. I love it. I think it's an excellent platform. Yeah.
Cool. All right, everybody. This is Shareholder Primacy, hosted by Ann Lipton and me, Mike Levin. I'm an independent activist investor and advisor to investors about their activist situation. We've been talking to Andrew Droste, who is Global Head of Corporate Governance at Columbia Threadneedle Investments. You can find me, Mike, at theactivistinvestor.com and Andrew at, pay attention, corpgov, one word, .substack.com. Once again, corpgov.substack.com. That's where you can find Mr. Corp Gov and get in touch with Andrew. Our podcast is produced and distributed by Free Float Media. Thanks for listening. We'll talk again soon.